Good morning, good afternoon, folks. So, I want to start uploading daily, trying to do some daily uploads. I don't trade every day, but I do show up for the market every day and try to execute my trades if I'm able to. Excuse me. And, yeah, I'm going to just go through each and every day and continue just to get better. But if we're looking here right now, as you can see, we got this big CPI news candle, and if we look on the 4 hour here, as you can tell, it's just a bunch of chop back and forth. New president coming in, Trump coming in office, just a bunch of chop, not really deciding on where we want to go. Got the weekly here, just not really good at all. So we go to the daily here, you can't really see anything, so we're going to break it down to the 4 hour. And this is the 4 hour on NinjaTrader. It's not really the actual 4 hour, as you can tell right here. It's 240 minutes. NinjaTrader, for some reason, does not have a 4 hour timestamp, so I had to come up with my own. It's 240 minutes. So what is on my chart may not be on other people's quote unquote 4 hour chart. So I like to kind of get into the 1 hour chart here, get away from the 4 hour. And if we look on the 4 hour chart here, the 1 hour chart, excuse me, we can see a little bit here. So I trade ICT concepts, and price is going to always do what it's going to do. You just have to be able to read it and have a bias. And right now, I don't really have a bias, but from what I see, if I'm looking at this, zoom out, like I said, all this chop. So we want to zoom in to where exactly price is trading at. We just swept liquidity right here with this news candle, and we have news at 9, so we're going to keep that in mind. Low quality trading day today, so I'm not really looking for a trade, but if it's there, then I'll take it. But as I'm looking at this right now, I'm thinking, where is price most likely to go to? So we just took all these stops out, and I do want to show this too. This, to me, right here, all this right here looks like accumulation. So we have accumulation, manipulation, distribution is what we could be having play out here, because I don't like all these tops. If you look at all these tops here, we have this right here, and we have this one right here. So we have all these stacked highs right here. So I'm thinking, excuse me, I'm drinking coffee. I'm thinking, okay, if price does not want to come down here, price is going to draw back up into these highs and take all these out. We already got people trapped in shorts coming down off that news candle, quote unquote bearish day. So that's what I'm looking at as far as on the hourly chart here. And if I were to break it down to the 15-minute chart, this is what we have. And like I said, I don't like these stacked highs sitting here. Like I said, all this, the accumulation looks a lot more seeable per se. Look at all this. It's accumulating. Again, we have news at 9. Jerome Powell is testifying in front of Congress, I believe, and that could cause the market to rip or go down. Now, from what you're looking at right here, is we have accumulation, manipulation, distribution back to the upside, which is the power of 3. I don't know if that's what's going to happen, but that's what I'm thinking. So that's what my bias is set on. Of course, your bias can change at any given time if you're realizing different factors. So that's what I'm waiting for. Not really jumping into a trade so quick. I want to see if price wants to start moving back up here. And right here on the 15, I don't trade until let me fix this real quick, y'all. I don't trade until 8:45, which is in 3 minutes. I'm over here in the south, so I know a lot of people trade on New York time, which is an hour ahead of me. So that's why that's that. But I'm not looking to get long. I'm not looking to get short. I'm just watching the market. I don't trade every day. I don't try to trade every day. All I need is 1 to 2 trades a week. Most likely just 1 trade a week. And that's what we're going to sit here and wait on. And that's what I got. I plan on posting these. Try to post them daily. Don't know if I'm going to be able to, since I don't trade every single day. But we're going to see. I will upload my trades. If I take a trade, I will upload those daily and make YouTube videos on those. And of course, I'm going to try to catch those in these broadcasts. I'm going to pause and come in and out of these. I'm not going to just have my recording continuously running. I don't just sit here and stare at the monitor. I like to do other things while I'm waiting for a trade to form. So that's what we're going to do. I do need to see if I can pause this. I don't trade. I don't trade while recording too often. So I'm still learning everything here, how to do the OBS. Let's see how we can pause this. Pause recording. See if I can pause it. No, I don't want to stop the recording. So I'm not trying to stop it. I'm just trying to pause it. And I do, the reason I keep bringing my other screen over here, right here, is because I do have multiple monitors. Really, I just have two. I'm not going to act like I have a bunch, but I like to keep my 15 and my 1 hour on the other side, because I like to keep my 15-minute up as I'm watching the 1 minute or the 5 minute. So just a little FYI there. Still trying to see how to pause this. If anything, I'll just have to stop it and I'll have to edit it and put it all in one video. I just didn't want to have to continuously do that every single time. Let's see if this can work. I don't know. I'm gonna stop the recording here and we'll see. But I will pick up the recording when we either we're up here or down here. Like I said, Jerome will testify in 14 minutes. So that's probably when I will pull back up the thing around 9 o'clock. So we'll see. So till then, I'll see y'all. We're back here and looks like we're just continuing up here. We do have this 5-minute fair value gap. I'm kind of looking to get long here off of this 5-minute fair value gap. Go ahead and show y'all the 15-minute real quick. This is the 15-minute, and as I said, we're just continuing going up. I think we're coming up here. This is what I think. So we'll see, and watch how this. Watch how we don't dig into this 5-minute fair value gap until this 15-minute is formed here at 9 o'clock, which is when Jerome testifies. So we'll see here. Let me pull something up. Once that, let's see if we dig into it. We just formed the 15-minute here. I'm gonna keep that 5-minute there just to keep it. We are looking to get long here most likely. Or shall we dig into it? Here we go, we're digging into it. I believe this is where that would, whoa. Oh, my 1 minute doing that. 1 minute chart's acting a little funny today. So we're tapping into it. We did just take this out here. Took all these out, all these sell stops. We're in macro timing. 9 o'clock, end of the hour. Our hourly just formed. Let's check that out. So we have our hourly fair value gap above this. I think we continue up though. So just want to go ahead and throw that screen up there. Watching this here. I'm not saying that we do go up, but this would be a nice area that we would like to see here. This whole thing is a 15-minute. I do think we come back up here though, because we have to in order to come back down, I believe. It's because we have an hourly fair value gap up here. I just feel like we need to. Because if we want to come back down, what's up here? If we want to come back down, then show y'all this real quick. Then what I'm looking at is we need to come up and tap this hourly fair value gap. We are digging into it, and this would give us our liquidity right here on the higher time frame. So if we want to come down, then we need to take this high and then come down is what I'm thinking. We're inversing this 5 minute here. Jerome should be testifying, I believe. Let's see.
Other members of the committee, our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years.
I don't know if y'all can hear it or not.
Labor market conditions have cooled from their formerly overheated state and remain solid.
I'll do this for y'all.
Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. We are attentive to the risks on both sides of our mandate.
There we go.
I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized.
As you can see, we're inversing this 5 minute here. So that could be an early bear sign. Because we got of course we have all these. But again, I want to see if we want to go down here. I want to see us come and just take this out. Do something like this if I want to see though, we just inverse this 5 minute. So
The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy.
Objection. The chair is authorized to declare a recess of the committee at any time. This hearing is titled The Federal Reserve Semi-Annual Monetary Policy Report. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I will note that at the outset that this hearing has a hard stop at 1 p.m., which would...
Let's look at something here. As you can tell, price has now come back to discount of the range. Of this range. So we are in that inverse. We're going to mark this 5 minute up here. See what we can do here. Of course, we have our lower one right here. But if you're bullish and you want to see higher prices, which I kind of want to see higher prices, then we want to respect this. Of course, we may want to dig down deeper in here and then start to come up. But we'll see here. Start inverse fair value gap on the 5.
Monetary policy framework in August 2020, only 7 months before inflation began its 4-decade steep march upward in March of 2021. In hindsight, the adoption of a so-called flexible average inflation targeting appears ill-timed and ill-fitted for a post-pandemic world. As the Fed undertakes a review of its monetary policy framework, you must account for the lessons of the last 4 years and think about what's ahead over the horizon, not what has been. The Fed has made progress on inflation, but it's the last mile seems the hardest. As Bank of America economist Stephen Juneau said yesterday, inflation is stuck above target with risks to the upside. In August 2022, with inflation raging, you gave a speech that echoed some of your predecessors as chair. You vowed to keep at it till we're confident the job is done. It's a vow you should fulfill. With this morning's confirmation that inflation is well above the 2% target at 3% and making move upwards, other economic indicators are positive. As you reported yesterday, a low inflation rate, solid GDP growth, and financial conditions continue to support expansion and investment. This is not a time to say that there are no risks, but some perhaps unseen. However, these risks, in comparison to the risk of a resurgence of inflation, present are modest. Given the already high prices due to President Biden's inflation, Americans simply cannot afford further price increases at the grocery store and gas pump. Such a resurgence would likely force the Fed to begin another tightening cycle, making mortgages, credit cards, and small business loans unattainable for many. That's why I urge the Fed to forge ahead with its monetary policy duties until you're confident the mission is complete and price stability has been restored. The fact is, over the past decade, we've witnessed too many distracting additional mandates, diluting the Fed's core mission of price stability. This is the reason we formed the Task Force on Monetary Policy.
Looks like we formed this bear spot fair value gap here. So see what happens here. Check this. We know we're at discount. I'm gonna go ahead and take that off. I'm going to only put this on. No, I don't want that really on my 15. I want to show y'all the 15-minute real quick. So 15-minute, you can see right here, price is going down. Check the 15. Accumulation, manipulation, distribution. That's what we have in play here, I believe. But we'll see here. We are starting to push down heavy off of this 1 hour fair value gap. Actually, it's not even 1 hour. 15 minutes. Just the news fair value gap here. I believe that we did come to discount of that range. Yep. So we'll see here what we can get. Price is definitely wanting to come down here. We definitely have this 5-minute here. Doesn't look too promising though, but we'll see.
Opportunity to evaluate the effectiveness of the Fed's toolkit and its vast influence on the lives of every American. The creation of the new monetary policy, Treasury market resilience, and economic prosperity task force will afford us the opportunity to dive deeper into this topic. Chairman Powell, thank you for being here. There are real issues that deserve our attention, and I hope today will be productive. I look forward to hearing your testimony on the state of the economy, where we're at, and where we're headed. Yield back, Mr. Chairman.
Gentleman yields back. The chair recognizes Mr. Vargas, the ranking member of the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force, for 1 minute.
Thank you very much, Mr. Chairman, and thank you, ranking member. And thank you, Chairman Powell, both for your years of
I don't know why my 1
public
minute's
service and for
acting
appearing
like
before
that.
our committee today. As a ranking member of the newly formed Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force, I look forward to working with Chairman Lucas and the rest of my colleagues to address these important issues. The research is clear. Independent central banks perform better in carrying out their mandates than politically motivated central banks. The independence of the Federal Reserve is crucial to achievement of this dual mandate goals to maintain both maximum employment and stable prices. And although this dual mandate has been criticized by some, it continues to serve Americans well. It has not prevented the Fed from making substantial progress on driving down inflation, all the while avoiding a recession, which many saw as inevitable. I look forward to your testimony, Chairman Powell, and I yield back.
Gentleman yields back. I'd like to turn to the gentleman from Michigan and yield to him for a point of personal privilege. Mr. Heisman.
Thank you, Chairman Hill. And as we all know, all good things must come to an end. And I want to take a minute to recognize someone who is leading the committee, but has been an integral part of the oversight work Republicans have done over the last 5 years. Although Nicole Vo is all of 29 years old, something that we tease her about on a fairly regular basis, I quickly realized that despite her physical stature, she was a force to be reckoned with. Her dedication to my team, this committee, for colleagues and this institution are something that we all should aspire.
Might take a stab here. Looks like we might want to come down to this 5-minute fair value gap. We're still in this one though. I'm not going to take a stab. We're going to sit here and see. We're going to see what happens here. Might take a stab long, possibly. So I'm looking at. Come on. I don't know why it's doing that. This could have been a liquidity sweep on the 5-minute discounted range. I don't really like it, but it's fine. Tap into this 5-minute right here. What's your bias? Is the big part in this. I want to see higher prices. Again, I want to see that hourly fair value gap tapped into up here. We are tapping into that 5-minute, but look at this candle structure coming out of here. So we have our market structure shift right. I don't think we got it right there. Continue to watch here. 17. I risk dollar amount, not points. So we'll see. Look at that breakup. This is looking nice to long here. So we get in at 17, 117. Which would be that. We risk it. So we're risking about 31 points if we get in right here. Grab that. I think I'm going to see higher prices here. I'm going to come up here and tap into this. Make into a trade right here. See what happens. We'll do a starter position here on this fair value gap, and then we can get into some down here. So I do want to see it come down to this one. Take this 5-minute off. Get our fib out real quick. See what we're looking at. As if we wouldn't even come back down here. Pushing up real nice and strong. May not get a fill here, and that's fine. We're looking to get filled right here on 34.50. And reason being is because, like I said, I want to see these highs taken right here. So okay with risking that for the higher time frame play. Let me look at this. We may not even come back down. 5% would be right here. Yeah, we're going to go ahead and take that high. Man, that would have been such a nice play. Of course, you get the inverse there too, but not really looking for those. This is exactly what we wanted to see though. Come up here. As I said, I wanted to see it come up here and test that hourly fair value gap. No reason we really shouldn't take that right now. Don't really want to see it come back down to here. Just go ahead and take it. There we go. Unfortunately, we didn't get a chance to get long there. But that's fine. And we just took this out. So we have an option here. This is our 15-minute, and we just swept that liquidity right here. This is the hourly. We just tapped into the hourly fair value gap. However, as I said it before earlier in the video, accumulation, manipulation, distribution to the upside. Of course, if the opportunity presents itself, we could snag a short there, but that's not really what I'm looking for, because it's going against what I think the higher time frame is doing. Whew, look at that. Nice move up here. See here, go ahead and pull this back up. Matter of fact, it seems like just nothing really going on here.
play out as Trump doubles down on his efforts to gut the independence of the Fed. As we've seen with demands that you drop rates immediately. In fact, his co-president Musk attacked Fed independence in a tweet earlier this year. Chair Powell, I know you have been adamant about the independence of the Fed and have, thus far, resisted pressure from Trump. But after your decision to eliminate DEI initiatives following Trump's illegal order, I'm concerned that Trump has more influence over you than you let on. I speak to all of my colleagues on the Democratic side when I say that you must stand firm in defending the Fed's independence. Reject any attempt by Elon Musk and his Doge minions to gain access.
Still learning some of the order blocks here. If something is a order block or if it's not. But I want to say this, I'm not too sure. I think this is an order block. So if this is an order block, it should continue to push price higher. See here. Should price and we got this fair value gap here. I don't know why my 1 minute is kind of funky. Now if you want to take this short here, if you're looking to get into shorts here, you want to see a displacement down. We have this 5 minute fair value gap here. Order flow is bullish. Should push up. This is an order block, I'm pretty sure here. And if price wants to continue up, again, we're looking for these highs. If it's looking to come back down, then we look to target this low here. As you can see right here. Let's see what happens. Bodies tell the story, not the wicks. See if we can get above this for this main that closes right here. Nope. Again, we do have this fair value gap right here. Price could want to draw to that. See, I was just kind of messing around here. So we just took this intermediate low right here. Man, this one right here was a good long. This might have been the only play for the day. Especially, I mean, this was early 9 macro time. And of course, I don't really trade inverses, trying to look into them still. But I don't know why my 1 minute is acting like this. inversed it, took this out. Of course, this is all hindsight at the time. We did close above it, and if you were looking for this, then easy got in right here, risking this low, and took it all the way up. However, still looking into the inverse fair value, guys, as far as how I want to enter them. If I do too, I like to see the market structure shift, but I know this, as you can tell, just kind of went straight up, so it wasn't, the opportunity wasn't there, which is all good. Now what price is showing me here is that it wants to continue up, because we took this high, we got no displacement down. As I said, order flow is bullish. 5 minute, 3 minute, 2 minute, and even the 1 minute, we just got this little, when we took this high, we had some profit taken per algorithm. We tapped into this fair value gap and exploded back up. We just took all, actually this is equal lows, it looks like. Is it? No. We took people who were trailing their stops up under this out. So I can expect this to continue back up. Because per higher time frame, pull this over here for y'all. Per higher time frame here, there's no reason for us to, if you're looking at this on the 15 minute and you want to see price continue up here, there's absolutely no reason for price to come back down into this. We should just continue straight up into these highs. As I said, accumulation, manipulation. We have all this accumulation right here. Price wants to break up under that, trap sellers, and sling the price back up. That's what it wants to do. And that is what's going on right now. So that might just be it for day two. So I'm not getting my hopes up on anything. Just sitting here watching it still. I guess I'll put this back over here. This looks like it's just a bunch of accumulation here. Would be surprised if we just kind of could just continue up slowly. When you trade long enough, you can kind of tell what's going on as far as like this right here. This right here was run up. This was the move of the day. This was the whole move, and we didn't get a chance to get into it. So now here goes all the profit taken, accumulation for longs to continue up, or accumulation of shorts going down. So in my head, I'm thinking, okay, what are the odds I'm gonna get into a trade today? Not likely, because the play of the morning has already been made right here, coming down and going back up. That's the play of the morning. If you like it or not, that's what happened. And the odds of us getting into another trade is very slim. As I said, they did this, tapped, if you're trailing your stop, you got tapped out here. Price is going to continue up. And we can see here and watch this 15-minute, because that's what I want to do. Actually, you know what? This is what we'll do. Throw it over here. Whoops. And let's throw this up there. And this is our 15-minute. This is our hourly. We should just continue up here. So that's most likely what we're going to sit here and keep the rest of the. I'm only going to be on here for another 23 minutes. So if you want to go ahead and log off the video, you can. If I do enter a trade, of course I will make a separate video, and I will also put a timestamp right here now. So that's pretty much it. So just want to record it for my own purposes. I'm going to mute my mic. Could be looking to get long here. Let me show y'all the main screen here. We have that, as I showed you on the 15-minute chart. We have that 15-minute fair value gap here. 5-minute liquidity sweep, if you will, right here, which is why I mark that out. And we just went up under it here. Kind of want to see it go in there a little bit more. However, price did not, which is fine. Just tapped it there. Want to see price start to come back up here. Of course, my 1-minute chart wants to mess up. It won't be like that. I have to refresh all my stuff. See, it won't even let me play around with it. Here we go. We just took this level buy side here. Sell side. Check the 5-minute. And we just tapped this 5-minute fair value gap. See what happens here. This is a 15-minute fair value gap, so ideally I want to see it hold. Yes, 951. So unless we see something really nice here, not really looking to get long or into position. So we'll see. I'll pause it till then, or mute it till then. So I'm gonna go ahead and stop the recording here. I'm pretty sure we still continue up here. Let me show y'all what I was looking at here on the 15-minute real quick. So, like I said, we have this accumulation on the 15 hourly, higher time frame, whatever. We have this accumulation with this manipulation down. And what I was looking at just a second ago is, I'm not gonna enter it, but if you look here on the 15-minute, if you're confident, I'm pretty confident we go up here to these highs. Then, you could have entered right here on the fair value gap. Could have, if you want more confirmation, then you break down to the larger time frames. You could have got long there. And then what I was also looking at on the 5-minute over here is this, right? So we have our accumulation manipulation, and we swept our liquidity right here. Is this right here, right? So we had this market structure shift to the upside right here on this candle, and you could have gotten long right here at discount. This range wrote it up, but this is what we're looking at here. We get better each and every day. So that's it for the recording for today, and I'll be uploading back tomorrow.